What's expected to be achieved at this particular AIIB meeting? Of course, Luxembourg, the first country to host it outside of Asia, it is significant.
Well, it's one of the largest international events we've ever organized in Luxembourg, and we have a lot of experience because we are headquarter for European institutions, and in fact that's where we are here. So here Council Ministers of the EU meet regularly, but today, yes, we're hosting the AIIB annual meeting, first time in Europe, and we as Luxembourg were the first ones from Europe to join the AIIB, so I think this is a kind of recognition of the role we played as a small country, but believing in multilateralism. And the AIIB is a wonderful initiative that we need in these times of uncertainties.
We talk about infrastructure in the context of growth. Looking at growth in the Eurozone, we've just had the European Commission downgrading growth for the Eurozone for 2020. What's the outlook like? What's the biggest source of risk for the economy?
Well, the downgrade has been only very light by 0.1 or 0.2%. Growth will be around 1% as an average in Europe this year and next year. Luckily in Luxembourg we enjoy a double rate. I think one shouldn't over-exaggerate this downgrading. It's very limited. Yes, we have less growth than last year. The greatest threat is obviously on international trade. I mean, the trade tensions that are there, trade war eventually looming, but I think exactly a meeting like this one of the AIIB here in Luxembourg shows that what we need is more international order, more common action, and so I would say that for the time being we are in a wait-and-see position. If you look at also the latest trends in terms of growth of services in Europe and the growth of SMEs, the picture is much better.
And if you take a look at manufacturing, the picture isn't looking so great. The global manufacturing cycle is yet to bottom. How would that impact Europe?
Well, it would definitely impact the world champions of export of machines and of cars like Germany and other countries. But here again, I think one should be quite reasonable in what is happening. Obviously, one issue is climate change. Climate change is impacting the way we organize our economies, the way people are going to use cars. So we are in a transformation phase that will take years.
But going back to manufacturing, how much of an impact, how much would that eat into growth going forward, given that it hasn't quite bottomed?
Well, nobody really knows if it has bottomed. Obviously, we have in Europe a very accommodative monetary policy with interest rates that are even below zero on the one hand. Second, many countries that have a little bit of space are using that fiscal space to push consumption and public investments. So I think we have all the elements in place in Europe to counterbalance this downturn. I would just call it a downturn. This is not a recession.
I want to take a look at recent developments because Christine Lagarde will now be the next president of the ECB. Who do you think is a good successor for her at the IMF?
Well, ideally, the person that we need should be someone that has a good experience in crisis management. And when you look at the last 10 years, we've had lots of crises. The international financial crisis, we have difficult times in the euro area. We have been able to get out of this teenage crisis of the euro. So I think persons that have played a role in these 10 years and that have faced this international financial crisis are the ones that qualify.
Do you see the EU coming up with a joint candidate
Yes.
for the IMF position? When do you think that could be?
I think it would be the smartest that the EU and especially the euro area would agree on one candidate, which would make things much easier. I think the process in the making, we have to be a little bit patient, but I think in the coming days something is going to emerge.
The world, of course, is looking pretty much to the Fed to see what the Fed would do. We heard Jerome Powell coming out to say, talked about the global slowdown, but stopped short of saying he will cut rates. How much room do you think there is for the Fed to cut rates?
Well, you know, it's a tradition that finance ministers do not comment to policies of the Fed, of the European Central Bank. But let's be very objective here. The rates in the United States are above 2%, which is a low rate, but is far higher than in the European Union as we have with the European Central Bank. So there is a little bit of room of maneuver. Obviously, the slowdown that is happening a little bit also in the United States is of a limited stance, of a limited size. But I think the American interest rates have more room of maneuver than the European ones.
But the thing is, central banks around the world are running out of ammunition. Can the Fed save the global economy?
Well, the American economy is the most important in the world, as we all know.
So that's a yes.
Well, I think that, yes, definitely. When the American economy is turning well, is running well, it will not only grow inside, it will also attract a lot of investment, and on the other hand, it will import a lot of goods. In fact, the best engine for growth is international trade. And if we look at the years 2015, 16, 17, and the beginning of 18, what was really driving the world economy was international trade. The IMF keeps on telling us that. We must never forget that.